What is up, everybody? This is Stock Market Education, and today we're going to be talking about Visa and whether or not it's a buy. Let's get into it. Before we get into the video, make sure to click the like button and subscribe. It really helps my channel out, and leave a comment down in the comment section below whether or not you like Visa or plan on buying Visa stock in the future. With that being said, let's get into it. If we take a look at Visa's numbers, we can see that they're currently trading a little under $180 a share. The company is currently worth $393 billion, and they have a PE ratio of 32.12, which is a little high when you compare it to the S&P 500 PE ratio of 20. However, when we look at Visa's PE ratio compared to their competitors, they're all over the place, with the lowest ratio at 7 and the highest PE ratio all the way up to 95. And Visa has the largest market cap compared to anybody in the industry, and it's not even close. MasterCard is the second largest company, and they're still over $100 billion less than Visa. We can also see that Visa pays a small dividend of $1.20 per share, or about 0.67%. And they currently have a price target of $199.60 per share, which is about 11% higher than their current stock price. And if we compare Visa's stock price to the S&P 500 stock price, we can see that Visa has outperformed the markets, and Visa's price pattern mirrors the S&P 500 because Visa has a unique outlook on the market, because they generate revenue every time someone makes a purchase with a Visa card. So they have a unique outlook on demand and consumer confidence inside the markets. If we look at the top of their income statement, we can see that revenues increased from $15 billion in 2016 all the way up to $22.9 billion in 2019, for a percentage increase of 52%. And gross profit went from $12.3 billion up to $18.8 billion, for a percentage increase of 53%. And this was during a time when operating expenses only increased by 33%. If we go to the bottom of the income statement, we can see that net income went from $5.9 billion in 2016 up to $12 billion in 2019, increasing 102%. And EBITDA went from $8.9 billion up to $16 billion, increasing 80%. So we've seen some pretty good growth from Visa in the past 4 years, while being able to keep expenses low. If we look at their balance sheet, we can see that they have about $12 billion in total cash and $20.9 billion in total current assets, which is great when you compare it to the zero current debt that they have and $156 million of accounts payable, and total current liabilities is only $13.4 billion. If we look at the snapshot for cash flows, we can see that Visa had about $5.3 billion of cash flow from operating activity and $4.9 billion of free cash flow. And they're using about $5.5 billion of their cash to repurchase stock in the company, and they repurchased their stock at about $180 a share, which is slightly above the current price, and they'll be paying out $1.3 billion in the form of dividends. If we take a look at earnings estimates, we can see that they're expected to go from $5.06 earnings per share up to $5.91 per share, which is a 17% increase year over year. However, their earnings per share a year ago was about $5.44. So when you compare the earnings per share from 2019 to 2021, we can see that they'll have a 7% earnings increase in 2 years. And Visa has high profit margins. We can see that they have a profit margin of 52.26% and an operating margin of 66.98%, giving it one of the highest, if not the highest, profit margin amongst any other IT service company in the industry. When we take into account Visa's extremely high profit margins, along with their repurchase of stock at $180 a share, and their healthy balance sheet and income statement, you also have to take into account that they're in a competitive industry, and I'm not too sure about how much growth Visa has in front of them. When we look at total cards between 2019 and 2020, we can see that their total Visa cards only increased 4% year over year, which isn't bad because they still have added over 100 million cards. However, they seem to be slowing down on growth percentages. Other than that, Visa is a great stock to own. They have a proven business model, and if you would buy Visa stock and not look at it for 5 years, you'd be very happy with your investment. I would take a closer look at MasterCard because they have a great growth story with penetrating China's marketplace in front of them. Thank you guys for watching the video. Make sure to like and subscribe if you enjoyed the video, and have a great day. Bye.